Hi everybody, this is Alex Deploy from Expert4x. So welcome to today's presentation of the Grid EA support webinar. The details for the Grid EA can be found on hedgedforex.com. Our main site is Expert4x and the blog is expert-forex.com. Now, as an introduction to grid trading, I'm just going to tell you how it all happened, and it started in 2003 when I was looking at trading systems and the psychological impact on traders when they trade systems. Firstly, the psychological impact when a stop is hit, and the psychological impact when they get the direction wrong, and all those kind of things. So I set out to try and do the impossible. I tried to design a system with no stops, no scars, a system that was not dependent on direction, so you could actually trade. It doesn't matter which way the price goes, you are going to make a profit. And then the third thing, it has to be a profitable system. The fourth was that the potential results would be known before the time. Psychologically, that's also quite important. If you know that the worst loss that you can suffer is, let's say, 100 pips, then there's so much more certainty. It's a bit like waiting for a lift, and if there are no numbers showing you where the lift is, you get so irritated and insecure. Whereas if you know what's ahead, you feel more secure. So a lot of this is very psychological. The next point is it must have low risk. Again, a thing that forex traders strive after. And then the last one is it must be an automated system. So again, no emotion involved. So the system that we set out to do is actually quite a unique type of system. And it didn't happen overnight in 2003. This system underwent a number of changes and refinements, and we eventually came up with what we have today. Okay, and that is how the grid system got born, with those objectives. So I'm just going to run through the grid system. It's not a complicated formula. It is we call it the no-stop hedged grid forex investment system, and I'll explain all those terms in a while. But essentially, what you do is you start out establishing a grid with specific grid gap sizes, and I will explain that with practical examples later on. You then buy and sell at each level. As the price reaches a particular level, you enter a buy and sell. So you're hedging. That's why it's called a hedge system. You're buying and selling, but you do cash in your positive deals at each grid level. So as the price moves, one of those transactions, the buy or the sell, will go positive, and when you reach the next grid level, you cash in. And then the fourth one is you close all those transactions when you are in a break-even situation or when you are in a profitable situation at a particular grid level. And that again will become clearer as you see the practical examples. And when you've cashed in, you just start again. You start all over, buy and sell. You could even revise the grid sizes if you like, but you do you start again. The last point is that when all the transactions reach the fourth level, you would close all the transactions, and that is, they would be negative at that point. And we'll see it sounds bad, but they will not be as negative as one thinks. And at the fourth level, you will close. So that is our stop. Although we don't trade with stops with the individual transactions, we have a system stop, which says when we reach the fourth level, we cash everything in and we start again. That protects us. All right, so let's move on and see how the system works in theory, and then we'll look at it in practice. All right, so essentially this system has four gaps. This is a grid, and it goes upwards and downwards. So whatever you see going up, also imagine it going down. So this is a grid, and the price can only move in four ways. It can only move up and come back to where it started, or it can only move up twice and come back to the first level, or it can move up 3 times and come back to the second level, or it can move all the way through to the 4th level. There are no other possibilities for the price to move. It can dawdle between levels and that, but in the end, it has to cross or touch one of these boundaries, and those are the only 4 possibilities that we have. So we've met one of the requirements, is that there is certainty. We know what the loss will be there. We know what the situation will be there. We know that we'll make a profit here, and we'll know what we'll make a profit there. So let's move on. So that essentially is the playing field of the grid trading system. So let's have a look at the first move. The first movement starts, goes up 1 level and comes down to the start. Essentially what happens, and I'm not going to explain all the mathematics, but if you buy and sell, cash in the positive, you will end up with a positive result. And in this case, we're using a grid gap of 100 to keep it nice and simple. We're ignoring spreads to also keep it simple. So that gives you a 100 pip positive result. Now, if it moves up twice and comes back to the first level, so you have 1, 2, 3. So you have 3 cash-ins, that leg, you cash in 3, and you have 2 open transactions. Essentially, what then happens is that you also it results in a positive. So that is a good formation, and the previous one was a good formation. Now we're going to look at the other formations. If it goes up 3 times and moves down once, your result will be a break even. You'll cash in 4 times, but your open transactions will be equal to your cash-ins, and you would break even. And that is where you would get out of the deal. You would just start again. You would get out and start again, as the formula says. Now, here's the last one, and this is the one that we try and avoid, obviously, and this is where we would cash in the whole grid and start again at a loss. So if the price just starts trending, and it trends, and it trends, and it trends, and it trends, we will make a loss of 600 pips, which is 6 times the grid size. Now, if you're a gambling person, you will immediately calculate that we need to get 6 of those winning formations behind us to make sure that we don't run into an overall loss trading the grid system. So those are your odds. So we've got incredible certainty about this grid system. We know that if we unfortunate enough to get into this kind of position, we're going to get 6 times the grip side loss, and the trick is to get more than 6 times the profitable transactions to make up for that particular loss. Okay, and there are videos on YouTube which explains the calculations pretty well. You can actually work through these calculations on this video. Just freeze the frame and you can actually see how they calculate it. Alright, so now let's go back to our objectives. We've got a system with no stops because we're buying and selling at the same time. It's hedged, so we don't need stops. It is not dependent on the direction. So as I said, whatever you see going up, you can also see going down. So it's totally not dependent on direction. You don't have to know which way the price is going as long as it just goes. It is a profitable system, and that we'll see later on. The potential results are known before the time. So as we've seen too, we've just calculated exactly what kind of profits we're going to be making at the various stages and at the worst stage. You'll see that this is a profitable system, but also a low risk system. And there are 2 things that you've got to get right, and we'll get to those. And as you can see, it's a pretty automatic system. You can actually trade this without charts. As you've seen, if you look back, we're not using charts here. We're using, so all you do is you program these levels into your dealing station, and that's where the EA comes from. You actually don't need charts. It's a totally non-emotional system. So there we have it. And if you want more details on the actual grid system, please just go to YouTube, Google. Search on Expert4x Grid Forex, Expert4x Grid Forex, yes, and Expert4x, and you'll get a whole lot of videos that has been produced on the grid system over the years. Please remember, we've been marketing it since 2003. Here's a few ideas, results that have come through. The pound, for instance, in the last 2 years, it's generated 6,000 pips. And if you look at this, we just used an example, 10,000 as an example starting. That's still a very good return, 30% a year return, better than keeping your money in the bank. The euro franc, 50% return over 2 years, in other words, 25% over a year, and the euro 42, so 21% return every year. So that's why you'll see that this is a long-term system. The transactions do not happen very often. And that's why we call it an investment system rather than a trading system. Okay, so let's move on. So now what we're going to be looking at are the two big questions of the no-stop hedged grid Forex investment system. And those questions are, which currency do we use and what grid size do we use? Very important, critically important. When we started out right in the beginning, we tended to use grid sizes that were way too small. I mean, some people were trading with 30 pip and 50 pip grid sizes, way too small. You'll see as we move through the process that you need pretty large grid sizes, and also certain currencies are more adapt to the system than other currencies. All currencies are profitable. I must point that out. All currencies are profitable. Some are actually just more profitable than others. Right, so let's move on to the real fun of this presentation, and that is to answer these questions: which currency to use and which grid size to use. Okay, so what you should be seeing on your screen right now is the MetaTrader platform that we all use to trade on. And I've just got a nice big chart up there, doesn't matter which one it is, and I'm going to show you how to answer those two questions. So the first thing that we do, and at this point I'm assuming that you have loaded your Grid Expert Advisor onto the system, so it is on here, and you have access to it, and we can go from there. So what we're going to do is we go View, and then we go to Strategy Tester. Strategy Tester. Click on that, and it opens the Strategy Tester. Now, the Expert Advisor that we're going to be using today is the Expert Grid 2. You can see it was written in 2008. It's now 4 years old, so it's been around a bit, and it's pretty robust. And we're going to run the euro on this particular test. We're going to run it for only this year, from the 1st of January to the 1st of December, and we're going to use that to test this one. We'll test a few others, but this will be the main one. And remember, this is the strategy tester. You do two things with the strategy tester. You test your EA and you optimize your EA, and I'm going to show you both of those as we go through. So what I'm going to do is I'm going to open the Expert Properties, and that will give you a window showing you the settings for the grid. Now, it's pretty involved because the grid is actually a very simple system, but as we've gone on and we've reduced the EA, people have said to me, but we want flexible grid sizes. We don't want ones that are the same, and we want more than 4. We want up to 10 grid sizes. So we said, okay, if you want it, we'll build it into the EA, but our system is basically a four level grid system. So what we've built into the system is we've built in a system where you can have 10 gaps, You can have a lot different lot sizes per gap and all those kind of things. And those are just really for the fancy guys that really want to. And they've even got the lines are drawn in different levels, colors to help those kind of people. But what I go with, and is that I close out. So the only thing you need to do on your grid system is close your grid system out at the 4th level. So in the settings, make sure that that's set to 4. Then the next one is what type of grid are you going to trade with. I don't like variables. I like fixed grids. So you put a 1, fixed grid 1, not a variable. So it's 4 for closeout level, 1 for. Now the minute you do that, it then goes to the first grid size, and that will be the grid size that you use for all your grid levels if you click that as 1. So those are the only settings really that you need to worry about when you use your EA, is closeout for grid type 1 and then just remember that the grid level 1 is what will be applied in all the grid sizes. Okay, now what we want to do is we actually want to optimize the grid size. So we want the computer to run hundreds of variations and tell us what is the best grid size to use. Now in order to do that, you've got to tell it what parameters to use. So this start, step and stop are the parameters that we're going to tell the system to use to optimize. So I'm just going to say start at 100 pips, use 100 pip gaps. So in other words, 100 pip, then test 200, then test 300, then test 400, and then stop when you get to 800. 800 is a bit much. We don't want to go beyond that. So we're telling it, and then what we do is we tick that, which means when we start optimizing, it will only optimize that field. It only optimizes fields that are ticked. It doesn't optimize fields that are unticked. So we're now asking the computer to optimize starting at 100 with 100 gaps to 800. Now you could also start at 50. You could have 50 gaps to 800 or whatever. But in this example, I'm just keeping it simple: 100, 100, 800. So I say OK. Then I come down here to the optimization block and I click that. Now when that's clicked, it will optimize the items that have been ticked in the EA. I'm just going to run this on a 5-minute. So I'm running a whole year's or 11 months worth of data on a 5-minute chart just to get it as accurate as possible. And we're going to then. So all I need to now do is click start, and it will start an optimization process that will tell me which gaps are the most profitable. So I've clicked on start, and there it goes. It's starting to optimize, and it's not going to take long. The more variables you put in, the longer it takes. There we go. It's almost finished. There we are. Peeps going to find the results. Okay, so here are the results that it's found. Now it's gone and optimized every, so there's 1, 2, 3, 4, 5, and it's telling us that 300 is the best level to take because it gives you the best results. Now I'm going to just sort this, and you'll see there's very few losses. So you know, it's a pretty robust system, but there are losses, and in general, the losses will always be the small numbers, because as I said earlier, the smaller your grid size, the bigger the risk in losing. So they will generally be the small sizes. In fact, 300 is, you know, sometimes I would take 400 rather than 300 because that seems to be a better bet. But we're going to use this the best one. Now watch this carefully. What you then do is you highlight that reading that has come through there. You right click on it, and then it will give you a whole lot of things. But all you do is you say set as input parameters. Now when I click on that, it will take all those settings that have been optimized and put them into my EA for me automatically. I'm going to do that. I set it, and it has now gone into the EA. So when we go to the EA, we will see that 300 has been loaded into gap 1. So now we know that that is fine. So what we then do is we then run the EA with no optimizer. In other words, it's going to just run the EA as if it's a live trade. We're now testing the EA as if it's live trading. It runs it for this period and tells it, if you ran those settings for this period, that there are your results, and they are more or less what we optimized at. So 1120 is are the results. So that's pretty nifty, because you can take your optimization and then you can convert them into transactions, and it'll tell you, if you look here are all the transactions, buy, sell, and there are the results of the transaction. And right at the end of the year, your results are 11120. Okay, so that's pretty nifty. Now the other thing that it does is it will show you the transactions on the chart. So all you do is you then go open chart, click on that, and there's your chart. And those lines there are the actual transactions that have occurred. Now this is the 15-minute chart, a 5-minute chart, because we ran it on a 5-minute time frame. I'm going to go to the daily so we can see these transactions a little bit more clearly, and I'm going to make it a little bit smaller, and I might 13624. Just going to change. Don't want that. And the top must be 36. I think that's okay. Just makes it. Oh, there you go. That's a much nicer way of looking at the chart. Okay, so what has happened is it's actually gone and traded the grid system. Now I'm just going to draw the grid levels in for you. That's a grid level. That's a grid level. That's a grid level, and you can see it's just by eye. It's missed that one, and that's a grid level, and that's a grid level. Okay, so the grid levels were 300, if I remember from memory. So the gap between the grid levels was 300 for the euro for this year, and you can see it has trended tremendously. There's a tremendous trend that occurred of 1,400 pips. So it shows you this grid system can make profits in trending markets. So let's go and have a look at the basic shapes that we had. So let's see if this will work. Yeah, it does. So remember that is a basic shape. It goes up. Now we saw it in the illustration as upwards, but it also goes downwards. So this shape is a profitable shape. And let's go and find some movements that did that. So there's one. And there's one. And then it went up and down, so there's another profitable one, so there's another profitable shape. Right, then the next profitable shape that we have is this one, where it goes 2 down and 1 up. It's a mirror image of what I showed you earlier. So we have 2 down and 1 up. So all the deals so far are positive. Then we have another one of those little V's. Rough. There's another V, and currently it is work in progress. It's gone up to the first level, but it hasn't touched the second or the. See how close it came? That's quite frustrating when it comes so close and don't. You could have manually closed that if you wanted to, because at that point it was 280 pips up. So you would have most probably done something there, interfered. But let's just have a look at what's happened here. We've got 1 profitable, 2 profitable, 3 profitable, 4 profitable. That's 1,200 because that's 300 times 4, and that's more or less what we've made. It is now negative that little bit, so that's why it's telling us the profitability of this grid system is 1120 at the moment. So, but I think you're getting the message. The idea here is that those are the basic shapes. Now remember, there's another one that didn't occur in this instance, which was 3 down and 1 up. You know, and then the one that definitely didn't occur was the 4, which went like that, and luckily that didn't occur. Now this shape did actually occur over there, but because of the nature of the grid, because it started there and not there, we missed the and it didn't actually touch the bottom level. So you'll see the whole idea is that you never want to have it to go to the 3rd or the 4th level for that matter. Now it's not the end of the world. I mean, the Aussie has had a negative. In other words, it's had 6 times its grid size negative in this year, and yet it is more profitable than the euros. Now work that one out. So it's not the end of the world if you get stopped out. These grid systems can be quite robust and produce the results. Okay, so I hope that's helped you visualize what we're actually doing, and seeing these shapes on the charts help quite a lot. Right, so we've done our first exercise, and what I'm going to do is just put on the screen an Excel little spreadsheet, which I suggest all users of the Flexi grid system use to determine which currency they're going to trade and what kind of incomes they can expect. And that was the objective of this webinar, to show you exactly that. Now we've done it for the euro, so I'm going to put in 300 there. Oops, this doesn't look too good. I'm just going to level it off. And even, all right, that's it. The result was 1120, and our drawdown, and I'll just show you where you find the drawdown is. You go to the report. There's our report 122. Then you look at the maximum drawdown that you've experienced. There's an absolute drawdown, which is the drawdown from 10,000, but the maximum drawdown that you had was only $500, which is 5% of your capital. So it was 5%. So you then zap that 5% in there. I could be more accurate, but 5% is good enough. Okay, so what you would then do is you do exactly the same exercise that I've just done for all, you know, a good selection of currency crosses. You do the same exercise, and that immediately will answer the question, which currency is the most profitable, and what grid size should I be using for that currency? Isn't that you see, EAs do 2 things. They do the trading automatically for you. So that's the one thing. And people actually, I think EAs only do that. But what they also do is they can optimize your settings. And the fewer settings you have, the easier it is to optimize. In this case, we only had 1 setting that we wanted to optimize, so it's very easy then. And also, it can test your system. So you saw that in action today. We did an optimization. We did an optimization exercise, and then when we were finished, we unticked that block and click start again, and that was testing whether the systems that we had in the settings that we had in our EA were actually correct. And you should be testing and optimizing all of your EAs. Any EA that you have, you should be doing this too. Okay, so now we have that setting. So I'm going to go into the more advanced process, and we're going to look at some Flexi grid options. And with the Flexi grid option, we are saying that we can have many more grid sizes than 4, and they can also be flexible. In other words, the one can be 200, the other one can be 400, and so on. And let's see what results we get there. I personally don't like this because it's what you call curve fitting. This one is a lot more reliable. But let's go and see. And I actually haven't done this, so it's going to be a surprise for me too. So how you do that is you go into your grid settings. You now say you now ask for this to be optimized. What is your closeout level? You can go from 1 to, and I'm going to go to 8. So we're going to test closeout levels from 1 to 8. Might take a little bit longer, but that's fine. And we're going to grid type. We now make variable. So you make that variable. And we now say we want all these gaps optimized, all of them. We'll go to 8. I'm not going to go beyond 8. And all of them will have 100 to 800. So it will now go and test a huge amount of variables and come back with the best settings for each gap on a flexible grid system. And then it'll be very interesting to see if that is more profitable. So let's just double check closeout level. We've got that as an optimization option. We've got the grid sizes up, and so we're going to go and we're going to everything's still the same. We click on optimization and away it goes. Now this might take a little bit longer because we've got more variables. So it's telling us it's going to take quite a long time. I'm just going to leave it to do its thing for a short while. Okay, now this kind of optimization will sometimes take a whole night to run. At the moment it's telling me that it's going to take 8 hours. It won't. It's already down to 7.5, and as we talk, you'll see this number dropping tremendously. So it will take a very long time to do this optimization because we've got a huge amount of variables in there, and remember it's actually testing every possible combination. It's actually testing 134 million options. 134 million options, but there is a little facility where it will automatically find only the options that really matter, and it will ignore the options that don't matter. But what we want to know is essentially, and I'll stop it as we go on, is this a better approach than the 4-layer approach? And I'll show you how we'll know that pretty soon. Anyway, I think we've covered the subject matter of the webinar. The objective of the webinar was to show EA owners how to optimize their grids so that they get a good feel for what kind of grid size they should be using for each currency that they have. While we're talking and waiting, I don't know if it will allow me in. Yes, it will. When you do this testing, you need to have a lot of history on your charts to do this kind of testing. So what you do is you go into options, and you can see I've got a huge number there. So what you can do is you just type a whole lot of 9s in there and a whole lot of 9s in there. What that will mean is that your system will start using the maximum amount of history that the system is allowed to use. So that's the first thing to do. You go and change this. You'll find if you go to yours that it is a very small number. I've actually got, that is the maximum number that I've got in my particular settings. So that's number one. Then number two is you go to tools again, you click on history, and you then click on the currency that you want to test. And I'm just going to use the euro for example, and I'm going to go to the 1 minute chart. Now I've already done this exercise, so I've actually got 4 million records of the Euro 1 minute. Doesn't sound like much, but it actually covers a couple of years, 1 minute charts. And if you've got 4 million, it all flows down into the 5 minute and 15 minute, and it all makes them work for about 10 years or so. That's how so I'm okay. But how you would get it is, what you do is, and I'm going to show you how you do this, watch this very carefully. You highlight the first item, you go down to the last item, you then press shift and highlight, and then it highlights, shift and enter, and then it highlights all the history. And I'm not going to do this now. When it's highlighted like that, you click on delete. It will then delete everything that you have in there, and it's not bad, because you won't have 4 million. You'll only have 1,000, a couple of thousand in there. So it will delete what you've got, and then straight after that, you go and say download. And what will happen is, it will download, and look at the information I have. It's back to 1999. There's 12 years or 13 years of history that I've got in my system. So it will then download that type of history. So you need to do this if you are going to do detailed optimization of your grid system. For every currency that you're doing, do the 1 minute. When it's finished with the download, it will download and it will tell you, oh, now I've got 4 million. Then you just click on each of these guys. You just click on them like that, like I'm doing now, and all that information will automatically flow into each of the other time frames. So that's very important for the optimization function that you will need to do to optimize the grid sizes. Especially, as you can see, I used a 5 minute chart because I wanted to get the results as accurate as well. Some people can even use a 1 minute chart, but if it's going to take 7 hours using a 5 minute chart, it's going to take 5 times as long to do 1 minute. So that's the way. And in fact, I could have used 15 minute, and it would have been a lot faster. Okay, so just remember, before you optimize and test, get your history in your history center up to date, and you should do. Now, just out of interest, we'll go to the Euro. All right, that's got a fair amount of history. I'll just go and find an obscure one that I might not have ever used. Oh, that one I'm sure I haven't used. You see, some of them don't even have history. Oops, there we are. 2,000 records. Now, there's a good chance that if you go into yours, you'll see a very small number there. So most when you upload the MetaTrader, they normally upload it with minimal history, because then it takes too long. But I can now do this exercise. I can highlight the first one, do shift, enter on the last one, delete them, download, and that number will become 4 million or so. So that's quite important. Okay, look, it's bumbling along. It hasn't even scratched the surface so far, but I'm going to stop this one. I don't physically need to stop it. I can actually just go and look at the results so far, and the results so far tell us that there is more profitability in following a Flexi grid system. So in other words, here we have a result of 1,800, which is more than the 1,120 that we had before, and it's telling us that if we used an approach where we still close at 4, but our first gap is 100, our second gap is 200, our third gap is 800, and our fourth gap is 600. If we use those kind of gaps, then we would have had a more profitable result. The drawdown, however, is higher. It's 20%, and you must probably look for drawdowns that are a little bit smaller than that. But let's take that as our final answer. We say 1853, a drawdown of 20%, and that would be variable. The result was 18 something, and the drawdown was 20%. And the grid sizes were, I think it was 100 to 200 I think it was 800. I'm just going by memory now. 800 and 600. So there we are. So we can now see the numbers. So it's 100, 200, 800, 600, and the result was that, and the drawdown was that. So now you can decide: do you want to go with a fixed one that gives you that kind of result, or do you want to go with a variable one that gives you? Now the chances are that these will not repeat themselves, so the reliability level of the flexible grids is less than the fixed grid one. The fixed grid one has a bit of logic behind it, and will stand the test of time a lot better than these flexible ones, but they do give a better result. So what you do is you do standard testing for all your currencies, and then you do flexible, and then you decide how dangerously you want to live. Okay, so let's go back to this one. This one's still dawdling along. See if there's been any newer ones. No, there hasn't been any. But I think you get the idea. The one way of making this faster is to maybe what I would do, for instance, is I would set this on maybe a 15-minute chart. I would also go and do the inputs maybe with gaps of, or maybe not 800, let's say just go up to 600. That cuts out a whole lot of options, and that will make that optimization run a lot faster. Or the other thing that you could do is you can have steps of 200 going up. That also will make it run. Anything that will reduce the number of options will make the optimization process go a lot faster. Okay, so let's, and I'm not going to do that. I think let's just go back to webinar. Was really to get the to answer these questions, which currency to use, and you've just seen the process that you will follow. You do that process for each currency using the standard grid and the flexi grid approach, and then you'll get a good feel of which currencies are the best to use for the grid system. And then what grid size, again you follow that approach and you will get the optimized grid size. You don't need. I've just used this year as an example for this webinar. You can do the last 5 years, you can do the last 3 years. As you've seen, you can download so much history that you can really test it really in a lot of detail. But so you can vary the years that you want. You can vary the periods. 15 minutes is most probably a nice optimal time frame to do it. You just want to get those transactions, and it will give it to you. And yes, so if you do have any questions, please send them through to info@expert4x.com, and Mary MacArthur or myself would help you with those particular questions. And if you do want further information about the grid system, please go to hedgedforex.com or visit YouTube and just search for the grid system. So from me, Alex Deploy, thank you very much for your participation in this webinar. I haven't taken questions specifically to try and keep it as short as possible, but if you do have questions, please send them to that email address that I mentioned. Again, from me, Alex Deploy, Expert4x, cheerio.